All right, man. I was gonna go to bed, where I was gonna get ready to go to bed. I was thinking I was gonna watch some Netflix. I keep seeing these Bird Box memes, and I was like, all right, I'll figure out what this is going on. Some Black Mirror, especially with how the markets are. I could use some deep conspiracy, twisted thoughts. But you guys got some comments on the last video. You said you wanted more. Let's do it. And I was thinking about Netflix and it reminded me of earnings. So I want to talk about what I'm going to watch tomorrow. I got Google here and I have a 10-year chart. I'm going to share something with you. It's related to earnings. I think you guys will like it. It relates to a play. I could probably make a video on it. I don't know if I posted it, but in 2015, the TTFs, I remember that pledge class collectively that day, everyone made like over $1 million because we hit Google contracts that went $100 to $10,000 a contract. No exaggeration. But that's what this is related to. But I'm going to share some stocks I'm looking at tomorrow. I have three specifically, and then I'm going to talk about how to get find cheap options contract. Now, this has been a question that's been asked a lot. I'm going to show you an example with one of the stocks and plays that I'm looking at tomorrow. I've already been building a position out on it. So I'm just showing you one factor. We've done live streams on this. So if you want to go back in the past and take a look at those, you can. But I will definitely, highlight these opportunities. If you've been on the streams and seen, me go about finding these contracts and trading, there's many aspects that go into it. It's not just, I can't give you 3 easy steps that I could advertise to you in 5 seconds on a YouTube video to get you to understand how to find the cheap contracts, but this should give you some insight. There's many steps, but always experience, paper trade if you're new. And if you are new, if any of this stuff in the video is confusing, we got the free stock trading course below, and we are going to stream tomorrow morning. So no big changes so far. You guys will be on there 6 a.m. Subscribe if you're new, and subscribe only if you want stock stuff and if you like me and other information and tutorials and all sorts of good stuff. But the pledge class, you guys can no longer apply. You can apply. The application itself now costs $500 though. So I suggest I suggest you do not apply. Not just so I don't have to take the website down. But I mean, I will if you really want to apply that bad. I'll take a look at it. But yeah, I'm excited, and let's talk about this here. So first, before I go over the plays that I want to talk about, earnings. I said this in the last video. I'm gonna say this again. And what I want to show you with this play is this is Google again, because I'm thinking the market right now with oil, and you'll see, that's one of the plays. I'm gonna show you how I'm gonna be playing oil, but it's a carbon copy of 2014, 2015. That's what it looks like. The market looks like, the S&P right now. It just reminds me way too much of this right here, where we were going. It was the same thing. We were going up. We had some growth from the bottom, and then it's catapulted in those few years from 2013 or 2012, late 2012 to 2015, right? Or 2014, which is kind of like 2016 to 2018. And it came down here and then kept going, and this was that first oil shock in October. And then the markets did pretty good in December, but they bounced up and then came up. We have not bounced yet. So it's kind of looking like a cross between here and here, but both of these were oil shocks. First time oil dropped and went there. So I'm going to show you the play through oil, but the markets responded appropriately. And even like Google went, it had its run up from 2011, 2012, $200 to like 600 in 2014. It dropped, but then those next two earnings, it made room for really big moves. And this is where we hit that play. And part was because it was beat down so much. So pay attention to both this earnings quarter one and 2019. Although we're very bearish and there could be stuff, again, the crash isn't going to happen when everyone's expecting it. So that's why I'm saying, depending on wherever we set a level or a bottom on the S&P, there's going to be one big relief rally in one period where it will be good. And I think that could happen through earnings and other developments like that. So pay attention to earnings. So I'm looking, Google is going to be one I'm going to be setting up for earnings. There's an earnings play for you now. And to stay in tune with this, we will use this lesson on finding cheap options to find earnings plays. So that is going to be part of finding cheap options. You have to understand what is your goal and what's your goal in mind when playing it with it. And especially depending on your budget, if you have a smaller account, I always say go for earnings, go for the catalyst, but that is something you have to think about. But we'll document that and go over it. Now, the plays I want to go over, Google could be one of them. I am going to look at Netflix tomorrow. Because I think Netflix is going to be one of the closer earnings. Finances, both XLF, but then also the banks, kind of related to oil, but those are going to be your first set of earnings. I think they've been beaten down so much that it will be something interesting to look at. And I haven't checked the divergence recently between the XLF and the SPY. I think they're now kind of close. But that's going to be one. The oil play I'm looking at, and this is related to the options, is DRIP. So someone brought this up in stream. I like it. Again, I'm with oil. I don't like the fact that it's still kind of up, and you guys have to be careful with these 3 times, these inverse, any of these crazy sort of ETFs. Be careful longing them. I'm playing options on it, but the thing with DRIP, we're going to go back here. The thing with DRIP is that you got to be careful long term, just with how it's designed and how IV just skyrockets when it goes up. I'm looking to set a play here, but what I do like is that over time you can see some of these options. They're really illiquid, but they're cheaper than normal substantially. Now, the bad part about DRIP is the spread. So this is also the market's closed, but if the spreads tighten, it's harder on the Februaries. And again, the timing on this, you got to be careful with timing. You could end up paying for a lot just because it's inflated, and these things are designed to go down. But the Januaries are substantially cheaper. Could you get some of these cheap ones? Yes, I think these could be a play, but you have to see. These are only 2 weeks out. It's very volatile, but this was only a week ago, so a lot could change. But I'm going to start trying to identify these for a shorter term move, and if I could get the spreads tightening up. But these are what I'm going to keep on watch. So you guys in the stream tomorrow, please keep this on watch. If you guys have anything for oil, let me know. Options, I'm not going to play any of the inverses with shares, but someone keep this up and keep your eyes on this. This is going to be an important one. But as you can see, finding cheap options, you guys ask, these are the plays. Look at this, is a 70-cent option. Now, this is a low probability, and this is crazy to say DRIP is going to go back to $25 in 2 weeks. You're going to need oil to make a pretty big move. I don't know. Oil's at 45. I think that's a $3 move, and that's stuff going bad with oil. And right now, why these are cheap is the market's not really expecting it. And again, this volatility index, after it's dropped and once it loses its steam, you got to understand with a volatility index, it's kind of like what we talked about with news. That's why I say you guys got to be careful longing them, because people think they could just buy them. And even though it might have been going up here, this is not sustainable for this sort of instrument. Eventually it's going to come down, or it has odds against it. So if oil doesn't crash or come down with the same velocity, this could start to rise up, but it may not clip back up here on this time frame. But that's why I'm saying you got to watch these. But then it makes sense why the spreads are so large. But the goal here is to find the deals. These ones are pretty illiquid. We don't know. It's hard to place a value on them, but I'm going to get both January and February, but as I'm looking at the developments in oil, I want to play them. But these are cheap, low probability. If it does happen, these are 60, 50 bucks. If you could get them, and snipe between the spreads, they could do pretty good for you. So that's one. The next play, you guys have heard me talk about this, Facebook. Now, if you haven't seen it, I'm going to be watching this every single day this week. I'm going to be watching this till earnings. I'm both setting up earnings play and I'm playing it in between the weeks, because I think coming into earnings we could get a move, or really the stock could stay quiet into it. But the fact of how investors are responding right now is going to be I think people aren't really too happy. The market has even gone up. Here was the last 15 minutes of the SPY. You saw that big move, but the S&P went up. It closed high, or was just below lows. But Facebook was weak. It was weak all day. We were talking about that on stream. So I'm going to be, I'm going after it. I'm building a short position. But now this is where I said the options are getting cheap, because here, the weeklies had a interesting thing. Look at all the weeklies up until here. You lost money if you bought any of these weeklies coming into Friday. That's the danger of weeklies. And some of these you got absolutely smoked. I got smoked on some. I got smoked on calls. Even when it went up, it was awful. But as you see here, maybe we'll go the last 5 days so you can see you bought it the day before. But even the January 18th, and you could see my video on how to find, the prices of options quickly and tell if there's premium. Look at the change close. These gained, and what percentage did these go up? About only 1%. You see, they didn't go. They only went like 6%. The closer you are to the money you gain, you made more. But other than that, then the day before, Facebook dropped like 2%, I believe. 1.64. It had that big drop up, and it's still, it could be lower. It's still, it's almost almost $10 higher than that low. So dollar for dollar just seems, it just really capitulated there for, many of those reasons, both with the market and the reasons why. And that's why I like Facebook as a play, because it has weakness with the market. It can pull the market, but then even there's that lawsuit and just all the other developments with these social media companies, elections, Russia hacking, Facebook, the momentum is against it, and that's what I'm looking for in the short term. That's why I said in between the weeks and their earnings, but I'm not hesitating to buy calls for earnings. Do not get that twisted, because again, anything with negative sentiment, just like the whole market, and that's why I'm saying into this earnings season, there's going to be an opportunity to find something. But now you see these options barely gained, and now February, that's where, they all lost. The price, that was the crazy part, because now these are further out the money. Understand that. That's what a lot of people mess up on. The big key with Facebook is that the options are at an interesting price because it's made big dollar amounts, and it's kind of weird. And these options on February, these are $5 increments. It's no longer these $1 increments closer to the money. So that's why they didn't gain value. 125 to 130 is here. You could see kind of the difference in the gain. These ones didn't go up at all. But at the end of the day, though, looking at these, you could take a look. We could overlay Facebook itself. But what I'm saying is now seeing if these options are cheap, you'll notice that the price of Facebook, it's lower, and you have the option. It's the price of the options aren't too bad. These are closer to the money. But when you get further from the money on some of the later dates, the more further out, like 85s, these chances of those hitting are very low. But I think anything around 120, even 110 is it gets lower. These could be lottos, but you'll start to notice that in the last few days, these options and even the call side, when you go look at the call side, both calls and puts are both at one of their cheapest points. Your calls are even at some of the lowest points for earnings, and these would cover earnings, I believe. Even if you looked at March, it's the same thing, So you're able to snag both these calls, and then some of these puts now, they're slightly higher still. They're still at a higher point, but then this was before a lot of the bad news came out. And again, you have good timing, but what I'm saying is that since you had 2 weeks ago, of the last 3 Wednesdays coming here that we're coming into, this will be the cheapest, Wednesday essentially that you're going to be getting at. Hasn't really been out here. Now, if it falls through here, that's what the next level is, but I'm going to use this as an option to scale in. But this is now, I was in it before the last couple days. We were seeing around here. I use this as a spot. It went up, dropped, and I was able to take profits. But now I kept some of the ones I held. They're all down. Now we start to average around here and keep building. And then if it goes down, we do the same. But I think it's going to be a good opportunity. I'm going to start setting up earnings, but that is what I'm going to play tomorrow, or if I find the opportunity. Opportunity has to present itself. If I don't see it, I'm not going to play it. If I don't like the premiums, if I'm too late, I don't know, but be on the stream, come ask a question. That's pretty much it. I love you guys. Let me know what comments you have. I don't think I'm going to have a video after this, but tomorrow morning, I'll see you on there. Happy New Year. Let's go, baby. The first trading day. Let's get it.